I've heard AI is bigger than the gasoline engine and electricity and all that. It's going to change the world. Will it replace people's jobs? Hello, Robert Kiyosaki, the Rich Dad Radio Show. I'm broadcasting from Phoenix, Arizona. And like I said, it's either heaven or hell. Right now it's heaven, but in another couple of months, it'll be hell. It gets hot as hell here. But anyway, we have a very important show because some of you have heard about AI, artificial intelligence, and it's going to be, from what I hear, it's going to be bigger than the internet and all this, and the hype is on. It's the same as Bitcoin. You know, they're saying Bitcoin today is like, let's say 60,000. It's going to go to 5 million a coin and all this. And you hear all these stories. But does that mean you should invest in it? No. You know what I mean? And one of the rules of thumb is if you're going to invest, you should know what you're investing in. Are you good at it? So I'm pretty good at oil because I went to school to be an oil man. So I make a lot of money on oil. I study real estate like crazy. I make a lot of money on real estate. And I'm a miner. I own gold mines and silver mines, but I study the subject. Do I recommend you invest in what I invest? No. But you should know what you should know. So a very special friend, longtime guest here, Bert Dohmen. He's going to be talking about AI, artificial intelligence. So it's going to be bigger and then, you know, the internet and all this other stuff. I hear all of this. But as my friends know, I know nothing about technology. I'm a complete dinosaur when it comes to technology. So am I going to jump into AI? Of course not. You know, that'd be suicide. But Bert's going to talk about, he's Dohmen Research. He's going to be talking about the services that Bert does. He's well known for his research. Bert is extremely well recognized by the leaders on Wall Street as one of the guys who researches the most. So he's going to be talking today about AI. But as you know, Rich Dad does not make any recommendations. We don't say buy this or sell that or do this. But he's going to be talking about his service for those who are interested in AI and how you can invest in this hottest new product coming up. So with that, we have a dear friend, Bert Dohmen. Bert, welcome to the program.
Nice to be with you, Robert, as always. Good to see your smiling face.
Yeah. So I've known Bert for I don't know how many years because we kind of grew up in Hawaii together. You know, the People's Republic of Hawaii, as Forbes calls it. It's so Marxist. But anyway, so AI, tell us about this one. Is this as big as the dot-com bubble and all this stuff?
Well, we have written that we think it's going to be much bigger than the dot-com bubble. And the dot-com bubble was very big and very profitable if you got out, which we were lucky to do on time on March 10th, 2000. And so you have to know when to sell. That's really the important thing in investing. Most people focus on buying. They want to catch the stock that doubles every month and so on. No, focus on knowing when to get out.
Correct.
You want to be able to preserve what you have.
Correct.
Keep from losing your butt.
And
That's basic.
Because I've known Bert for years, and one of the things that he pisses off a lot of people because everybody's riding high, and he'll come out with his Wellington report, which is a very important letter, comes out weekly report. But he says things that people don't want to hear. Like he'll say, get out. And they don't get out, and they take the hammering. So explain, why is AI bigger than .com internet?
Well, I think especially today, our schools are pathetic. People don't learn a lot in school anymore, and I'm talking about like universities and so on. And they learn all the stuff that you cannot translate in the job market. Nobody's going to give you a job because you're good at ESG and DEI, all those three-letter acronyms. You don't learn anything useful anymore. And luckily now we're seeing vocational schools really coming up and getting very popular. People need to learn something useful. And vocational schools actually teach people something useful. And that's an important thing. It's really sad that look at what's happening at the Ivy League schools. They're learning how to protest. I mean, who wants to know that? We should learn how to get along and learn from other people who are successful. that learning and reading is the most important thing. If you don't read, you will never be able to be successful, you know. And I find out today when we interview people that want to work with us and so on, they always ask, "What? Tell me about the latest books that you read." Oh, I don't read books, but I do a lot of reading. I said, "Where do you do your reading?" Oh, I go on Facebook and Instagram and so on. I said, "That is not reading."
You're talking my language now because
I
I'm disturbed by you knew my father, Ralph Kiyosaki, candidate for lieutenant governor of Hawaii, and all that. But he was a PhD. He knew nothing about money. That was my poor dad,
Yeah,
and nothing's changed.
yeah,
They're still teaching us kids nothing
yeah.
about money. So why is AI going to be bigger than .com or that stuff?
AI will take all of the data that's out there for a certain subject matter, all, and I'm talking about billions of bits and even terabytes of data. And the computer can analyze that in a few seconds' time and know what to do, what are the important points. And this is what we're trying to do in 1985 when we started a AI program for pattern recognition of stock charts. And but computers at that time were too weak; they couldn't do it. And but now they can do it, and they can actually use these terabytes of data to find out, for example, cancer, how to cure cancer. There are so many cancer studies out there that nobody has ever read. You know, like at the NIH, I think they've got a budget for about $25 billion a year on their studies, and they are excellent. I've read so many of them, especially on cancer, because we had a family member with cancer and so on. And just reading these studies, using common drugs for off-label use, you could find out how you can cure cancer. And this family member was cured in 3 years' time. It was remission since that time, although at the low point she had 2 days to live, according to the doctors. But so we abandoned the doctors and followed a different system. So anyway, you can learn so much from all the data that is out there. And that's what AI does. They take all of this known data, all the studies, etc., for a subject matter, and the computer in a few seconds' time analyzes that and then spits out the results. Said this and this and this would work well. These other things would not work well. And this is amazing. That's what we tried to achieve in the mid 1980s, you know, because I said, yeah, I and the other people in our company, we can look at charts, but boy, it takes a long time to look at 1,000 stock charts every day, you know. And so here, a computer can do it in a few seconds,
So,
and that's what it's all about. And you can bet that there are investment firms that are using pattern recognition and AI to analyze the stock market.
so why is it going to be bigger than .com? That's what I'm going to. How big is it going to get?
Because
That's what I'm.
Yeah, because you every business can use this. You can use AI for just about everything that happens in a company. Look at where I always said we need AI is customer service. You talk to most customer service people, they don't get trained. They get hired. They give them a chair and a desk, and that's it. You know,
Right.
they don't train these people anymore. You ask them a question, you get an answer. Well, I think it's like this, and I think it's like this. You know, they're guessing. You know, and so you just ask the computer that with AI, boom, in 1 second, they've got the answer for the question that you have. So there's tremendous applications for AI, you
I've
know, and the
and
computer can compute these things so much faster.
I've heard AI is bigger than the gasoline engine and electricity and all that. It's going to change the world. Will it replace people's jobs?
You know, that is a very important question. My feeling is no, because everything that has happened in the world that was supposed to replace millions of jobs uh, didn't do it, actually created jobs. I remember so well when I was in high school. There was the automatic switching at the telephone company started up. You know, when you make a telephone connection, you had to take an operator. Operator would connect you. Well, then they started with electronic switching. wow. So suddenly the computer did it, and then it got more automatic and so on, and till you didn't need an operator anymore and so on. And people said, "Oh boy, look at it! We got so and so many million people working on the switchboards of telephone companies. They're all going to be unemployed." It didn't happen.
Okay.
Did not happen.
And that's so,
It
Bert,
created more jobs.
yeah, Bert, and for some reason, Phoenix is a test area for a lot of new technology. And we've had Waymo cars driving around Phoenix for a long time. At the same time, everybody's jumping into Uber. So here are these young people, male and female, who are using their cars to be Uber drivers, and sitting in the stoplight next to them is a Waymo car without a driver. So how do you explain that? You know what I mean?
That's scary. That's scary.
And then
But they
what?
need to do something. The way the Waymo car knows is the stripes on the roads. That's how it knows where it should be steering. And the many roads that are not painted. So the cities have to adapt to this and start painting the streets so that the cameras on the automatic car have a guideline.
Right. And then one more thing is that my research, I found out that about 34% of jobs are drivers, like truck drivers and all this stuff. And then now and more people are pushing for driverless trucks. So that's why AI is such an important subject. It's going to be very, very big. And what you're saying here is very good advice. He says you can get into it, but you have to know when to exit it. So are you predicting
Yes.
I want to let you, this is what Bert sends me here. Fabulous work. I sit here and I study it and all this. This is one of his reports here. So if you're interested in AI, Bert, how does a person get a hold of this research paper?
Yeah, you can get it free. We're offering for free right now, and I think there's a website. You can go to our website, domencapital.com, and you can get it free for a limited time. It's about a 22 or 24 page report.
But,
It's
Bert,
really very good. It's not a sales. It's not a sales piece.
right, Bert, the price is fabulous, but the most important thing, you dumbed it down enough for me to understand it. That's what I'm complimenting you right now, because I'm going back to my original statement, don't invest in things you don't understand. Like I love real
Yeah.
estate. I love oil. I understand that stuff. So anyway, this is a fabulous page. The artificial intelligence frenzy has arrived. And before you jump in, I would suggest you take Bert Dohmen, Dohmen Capital Research, up on this offer. It's well written. It's simple. I've got all kinds of things, studying it. And now I want to invest in AI, except I'm still stupid. So that's why I have Bert here, is because he's going to explain. For somebody like me, Bert, I'm a dinosaur when it comes to technology. I barely use a cell phone, and for me to jump into AI would be stupid. You know what I mean? It'd really be stupid. So when you come back, we're going to be talking about how Dohmen Capital offers the services for people like me who are AI. And when I say AI, it's not artificial intelligence. AI stands for arrogant and ignorant. Arrogant and ignorant.
All right.
No, because Bert, I'm going here. I don't want to do what Bert does. I don't want to sit there and research this stuff. I don't want to sit there and dedicate your whole life to pattern recognition of charts and all this stuff. But Bert's been in it for years, and I think he might be one of the most qualified people to be speaking on investing in AI. So if you're into artificial intelligence, Bert's your guy. But if you're like me and you're arrogant and ignorant and don't want to study it, Bert's still your guy. So when we come back, Bert, we'll be talking more about, the pitfalls of getting into one of the biggest changes in world history, artificial intelligence. We'll be right back.
Have you heard about the expanding influence of BRICS, Brazil, Russia, India, China, and South Africa, and its potential to severely impact the US dollar by possibly creating a new world currency? Even JP Morgan said, and I'm paraphrasing, the impact of BRICS would most likely be felt here in the US, where moving away from the dollar would cause our financial assets like our IRAs and 401ks to lose value. We agree with JP Morgan and many others. Now's the time to position yourself for stability, security, and wealth protection. So take it from Robert and me, whether you're a seasoned investor or just starting, we believe that gold should be a part of everyone's portfolio. Seize the opportunity to ensure your financial future with gold and do it with one of the best in the industry, Allegiance Gold. Allegiance Gold has done things right from the beginning, having earned 5 stars with TrustLink and an A+ with the Better Business Bureau. Allegiance Gold can help protect your IRA or 401k with physical gold and silver, or you can have it delivered securely to your doorstep. Get up to $5,000 in free silver on a qualifying investment when you visit protectwithrobert.com today. Or you can call 844-3-ROBERT. That's 844-3-ROBERT. Hi, everyone. I'm Kim Kiyosaki. Thank you for being with us today. As CEO and co-founder of the Rich Dad Company, I can assure you, Robert and I are both dedicated to our Rich Dad mission to elevate the financial well-being of humanity. And you are the humanity. We truly want you to succeed. When you succeed, we all succeed, and our mission grows stronger. With that in mind, I'm excited to extend a personal invitation to you to elevate your financial well-being by attending our exclusive free online wealth building event hosted by Robert. You'll learn what to focus on first to start increasing your cash flow immediately. You can reserve your seat right now by going to richdadonline.com. Just go to richdadonline.com. The event is 100% free and will help you achieve your financial goals.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show. Today we're speaking to a longtime friend of myself personally, Bert Dohmen. And we're both from Hawaii. And I remember when Bert said something, people either loved him or hated him. So Bert just talks about what he sees coming. And he's the Dohmen Capital Research. He sent me this huge thing on artificial intelligence, and it's for free. But let me explain why his work is so important. Is because Bert keeps it simple enough for a guy like me to understand. Because Bert does a lot of technical trading, but his background in the world of finance is impeccable. He's extremely knowledgeable. So he keeps it simple. And for those of you who want to jump into artificial intelligence, this is for free. But let me show you what's in it, why it's so important. Because if what Bert says is true, we're going into another massive bubble. So this here is a chart of Cisco. That was part of the dot-com bubble. And then this here is NVIDIA artificial intelligence. In other words, the patterns are similar. So everybody's jumping in to AI right now, artificial intelligence. But what they are is arrogant and ignorant AI. They don't know anything. So the reason I want to talk to Bert is for somebody like me who is AI, arrogant and ignorant, and not willing to do all the research that Dohmen Research does. What can I do, Bert, to be part of this whole AI boom coming up?
Well, we have one program which we started because so many people had the same question: what should I invest in? And we don't manage money. Okay, I don't want to manage money. And so I said, but we can guide people. So we started 5 different model portfolios consisting of ETFs. And there's an opportunistic, there's a conservative.
Yeah.
Yes, exchange traded funds. And so that's a nice diversified investment because individual stocks are targeted by the high frequency trading and the algo trading operations. They target those. So when they see everybody's into one stock, they just knock the stock down for 20, 30%. And that's their lunch money for the day. They make maybe $10, $20 million. And knocking these stocks down, and they pick them up at the bottom when everybody's chickening out. So this is the individual stock trading that we have nowadays. It's totally manipulated since 2007. And 2007 was the day when the SEC did away with an optic rule, which prevented outfits like HFT from manipulating the market. And I won't go into the things, but it's in the Wellington letter. I explain what the optic rule, which was in effect since 1933, they removed it in 2007 quietly. And I said, this is significant. That is such a great rule that prevents manipulation. Why are they removing it? Well, now we know why they removed it, because high frequency trading, you can't really do well with this optic rule. So everything is manipulated. Everything is fake. You wrote a great book, and I wish you would put that out again. Now you've got so much more stuff to add. Your book was called Fake. And that was great. And now you can make it twice as thick because there's so much more fake stuff going on. Okay,
Right.
so
Right.
anyway, these portfolios, we give you percentages to put into each ETF. And we always say, we would do this, not you should do this. We would do this. And when we get a sell signal on our technicals, our chart analysis, and so on, we say, we would sell this, and for the proceeds, we would buy this, and so on. This is the way to invest intelligently. Just because you hear somebody at a conference or on TV saying something nice about a stock doesn't mean you should buy it, because he will never go on TV again to tell you when to sell. So you have to know what you're doing. It's so important. Never invest on a stock tip. The hot stock tips will give you cold feet sooner or later. So we came up with this program. It's very reasonable. We don't care where you have the money. We don't care how much money you have in your investment portfolio. It's none of our business. Okay, we just tell you what we would do in the markets.
So
that's it.
So how much
Because every person has different requirements.
So let me summarize what you just said, because this is very, very important. The reason I love Bert's work is, as you're studying his reports, he keeps it simple enough for a guy like me who is arrogant and ignorant, not artificial. I go, I don't want to learn all this stuff, but Bert learns it. So again, this here is Cisco, and that was a darling. Everybody was into Cisco, and today is NVIDIA. And what Bert is saying, don't chase the individual stock. Go into an ETF, which is diversified. Please, let me finish. But he'll explain why this series of ETFs are best for somebody like me, who is technologically backward, but really not that interested. So that's why your service is so priceless. And again, this is your free offer here, artificial intelligence. And I love this. That's most academic system is artificial intelligence. Most economists, Bert and I agree, most economists don't know what they're talking about because they went to school. They don't have real world experience. So that's why your service is so important. So Bert, how much does your service cost for somebody like me who knows jack? Nothing. I'm from Hilo, Hawaii. Remember, Hilo, Hawaii, we're not the smartest guys on earth.
No, the least expensive service that we have is $750 a year. Comes out
a year,
twice a month. A year.
That's all?
Yes. Twice a month, and it's usually about 25 pages. Yeah. So you get about 40 to 50 pages of really good research and content every month for that. So it's a gift, but it's only for people who really like to read, not people who think reading is going to Facebook. This is for people who read for knowledge. Okay, so that's the difference. Yeah. But you mentioned the Cisco stock.
They also don't listen to CNBC for the hot tips, right?
Yeah, well, hot tips are the worst thing you can. Oh, especially tips you get at cocktail parties. People, it's just like when I go to a cocktail party, it's just like doctors, Oh, you're a doctor. Oh, I've got this pain in my big toe. Everybody wants to know what to do about their ailments. And when I go there, they say, what stock should I buy? What stock should I buy? And then I ask them, well, what's your time horizon? A week, a month, or a year, or 10 years? And they say, oh, I never thought of that. And that's the end of the conversation.
Yeah. What you just said was important, because this is Cisco. It went up. And what he's talking about in this article, which is free, is that the video is going up, so people choose one stock. And what Bert says, which I agree 100% in, it's not so much when you get in, it's when do you get out. And I think because I think what you're predicting, there'll be a crash here too. Is that correct?
Yes, eventually, yes. But see, the timing is so important, and nobody can know that ahead of time. We get our time because our indicators show you money flow, flowing into a stock and money flowing out of a stock. And money flow is the key of everything. The only thing that can change the price of an asset is supply and demand. If there's more supply than demand, then the stock goes down. If there's more demand than supply, it goes up. Very, very simple. But people don't realize that. It's not the earnings that make stocks go up. This is all a bunch of BS. This is for people who think that earnings are the key. Here's the key. Just look at earnings and you can make a lot of money. Well, over the years, and I've been trading the markets over 50 years with my own money, okay? And I know that many times the stocks with the best earnings, they go down the most, like Cisco at that time. You later on find out why, because the earnings gains were illusionary. And so you don't want to go by what everybody's looking at. When your opinion in the market is the same as what you hear on financial TV, you know you're going to be wrong. You know you're going to be wrong. You always want to be in a minority where everybody says, "Oh, you're crazy to even want to consider this as an investment."
Yeah.
But timing is important. Sometimes you can buy a stock without earnings, even without sales, and make a lot of money. And for example, in the dot-com bubble, I bought a stock, IPO'd at $2.50. It was really unknown. A company. When it got up to 120 from 2.5, 120, I said, this is starting to look good, but it still has one problem: has no sales. So, but it looked good on the charts. Money flow was terrific, so I bought it. Okay, got up to 300, 400, 500, etc. When it got up to 950, I said that's close to 1,000. It will not go over 1,000, and I started selling. Okay, and I think the high was around 992 on that trip, and then it went back to zero.
Right.
Okay, so you don't want to go back to zero. You want to sell and years later, I met the founder of that company at a social gathering, and he told me who he was, and I said, "Oh, Commerce One. I found memories of that stock. I sold most of my stocks above 950." And he said, "So did I."
So let me see what Bert is saying here, because everybody knows right now it's Bitcoin is the hottest thing amongst the younger generation and all this. A lot of old guys are not in it, but same as Bitcoin. I'm in it. I got in. I'm glad I got in it when I did. I got in it at 6,000 because I watched it go to 20, retrace back. I thought it would die at zero, but it came back. It hit 6, and then I bought again. But now, exactly as Bert says, people say, well, it's going to go to $1 million a coin. At that time, I'm getting ready to get out. And that's what Bert does. He provides his Dohmen Research, and he'll tell you when to get in and when to get out, but more importantly, why. And so if you really want your financial education, I cannot recommend anybody much more than Bert Dohmen, especially in the world of stocks, because that's the large part of the economy. But Bert, what you're doing is you're educating people, and that's why I love having you on the program here. But it's not only when you get in, it's when do you get out.
That's right.
Yeah.
And that's what we try to do with our money flow analysis. Just watch the money flow. When money no longer flows in, it's starting to come out, the insiders are selling.
Wait.
Okay.
I want to back this guy up here, because you don't hear him talking about what the Fed is doing, because he's talking about the money flow coming in. It's quantity of money going in that makes the difference, not interest rates. So what Bert's
I'm so
watching.
glad you mentioned the Fed. Yeah. The Wall Street Journal years ago, it was about 2 years after I founded the company in 1977. So 2 years later, the Fed had an article. They called me leading Fed watcher. And I said, well, I think I do more than just watching the Fed. I try to interpret what they're doing. And this is the key right now. Everybody's talking about inflation. And people think that really higher oil prices, higher rental prices, and so on cause inflation. No, it's the other way around. It's inflation, the unlimited money creation that we have today, that's what causes these prices to go up.
Yeah.
It's the other way around. And the economists, I don't know if they don't know the difference, if they're doing this intentionally to confuse people, or maybe they're just dumb and they don't know any better. I don't know. My degree is in chemistry, but I took 2 years of economics at the university just to find out why economists are always so wrong. I said, this is amazing. They're always so wrong. Why? And what I found out in 2 years of taking economics, I found out why.
Yeah.
They, they're working with false theories.
And the Fed has about 745 PhD economists.
Yes, something like that. Yeah.
And that's why we're all screwed up. Hey, Bert, how do people get a hold of, get a further contact to find out more? Again, Rich Dad doesn't make any recommendations, but we do support financial education. You're one of the best there's out there. How do people get a hold of your stuff, should I say, from Dohmen Capital?
The best thing is go to our website. It has an email address on there and so on. And that's Dohmen Capital. You can see it here, our logo, DomenCapital.com.
Good.
That's the best way. You go to the website, has all the information of our services, what we do, and so on. And the other program I was talking about with the model portfolio, we have a separate website. It's called Hedge Folios, but it's not a hedge fund.
How much are those services?
Well, the Wellington is at $750. We have trading services for shorter term trading, and they go up to $6,000 a year. And then we have this choice that's around, let's say, $3,000 a year.
It's cheaper than going to college and learning nothing.
Exactly. I just read on TV, there was a line, $90,000 tuition to go to one of these crappy Ivy League schools. I mean, what are they charging for?
I don't know. Hey, Bert, we could go on forever on this subject, but one thing good about getting old, you've seen a lot of history for real. We lived through it.
Guy.
And this is the same,
okay.
And the same as a school teacher. Some of them have such bad information. And that's why I call it AI arrogant and ignorant.
Yeah. And then they come with the nose rings and the lip rings and so on, and the tattoos, and they are supposed to teach your children.
Yeah.
Huh. Okay.
Hey, Bert.
All right.
Thank you,
Bob. It was a pleasure.
Thank you. Thanks for keep up the great work. Thank you. And we'll be right.
I wish your listener just lots of luck. This is going to be a very, very interesting year. I think as a Chinese said, may you live in interesting times. Interesting times are really ahead.
Yeah, and we're coming one of the biggest booms in the world economy. So everybody pay attention. Bert, thank you very much. And we'll be right back. That's final word. Welcome back, Robert Kiyosaki. I want to thank a longtime friend from Hawaii, Bert Dohmen. He now lives in California. And like I said, when Bert talks, either people either love him or hate him, but he calls the markets as he sees it. And his company is Dohmen Research, and that's what they do. That's why I say AI could be artificial intelligence, but it could also be arrogance and ignorance. And I don't want to do the research that he does. So that's why I subscribe to his work here. Final word is this here, is that we're talking about education. Years ago, they used to teach economists a thing called a quantitative theory of money. Quantitative. They don't do that anymore. And what Bert was talking about is the quantity. So the old guys know that what causes prices to rise is money coming in, but what causes it to crash is money going out. So that's why his report's so important, because many people jump in, but they don't see people getting out. So that's what he does. And the final word is this, is that ever since COVID, they've printed, I don't know, 5 or 10 times more money since, I don't know how many times they printed more money. So the world is flooded with money right now. And then, and the problem with that is it's going to come back out, and people don't see it coming right now. So we're going to go into a massive, massive boom, but the odds are pretty good. We're going to go into a depression. And depression doesn't mean a big crash. Depression means that we're going to have, let's say we expect growth to be 3%, but growth is only at 2%. That's a depression. So things are slowing down, and then money will start to come out. Your job is to know, which is why I recommend subscribing to Dohmen Research Capital, to find out when money's coming in and money coming out. And that's what the name of my board game is, cash flow, not interest rates. Thank you very much for watching The Rich Dad Show.
This podcast is a presentation of Rich Dad Media Network.